this video, I'm going to be sharing with you how to get approved for a mortgage. If you've been following me here on the channel for the past few weeks, you know I've been doing a series on how to start investing in real estate. So I'm going to be taking a break from that for this video, because I believe whenever we get through with all this pandemic stuff, people are going to want to start buying houses. So you need to know how to get a mortgage. So there are 4 things that a bank is going to look for whenever you are getting a mortgage. The first thing is going to be your credit score. And the second thing, it's going to be your job history. Now the third thing is your DTI, your debt to income ratio. I'm going to be explaining on what that is exactly later on in this video. And the fourth and last thing, they're going to look at basically your bank statements. They're going to look at how much cash you actually have. So the bank knows that you are able to cover the down payment and have some left over. And all 4 of these, I'm going to be explaining everything to you so you know how to get a mortgage. So the first thing is your credit score. So when I talk to other people about credit score, it's a sensitive topic for people, but it's not that complicated. And when you go to get a mortgage, the minimum credit score is going to be a 580. With a 580 credit score, it's going to be hard for you to find some banks that will give you a mortgage, but it's not impossible. Your interest rate is also probably going to be a little bit higher, unfortunately. But when you go from a 580 to a 620 credit score, it jumps tremendously on how easy it is to get a mortgage. And from a 580 to a 620 credit score, the interest rates are a lot better for you as well. When it comes to your credit score, there's 2 huge things I want to touch on. First thing is your payment history, and the second thing is the amount of debt you have. So according to your FICO score, those 2 things alone make up 65% of your credit score. So these things are very, very important. When it comes to your payment history, you need to be making your payments on time. If you haven't in the past, you need to start making payments consecutively, 100% of your monthly payments for 12, 24, 36 months. So that late payment or payments that you have whenever you were younger doesn't have as big as effect on your credit score. If you're taking some value out of this video, hit that like button down below, make it turn blue. So the second thing, the amount of debt, and I kind of have a little experiment going on with the percentage amount of debt. So I can kind of give you guys a realistic view on how badly this impacts your credit score and why it's so important to keep down the amount of debt on credit cards or personal loans. But if you want to see that type of video, subscribe to this YouTube channel and hit that bell notification so you'll get notified when I do upload that video. So another quick note on credit score before we move on. Whenever you apply to get a mortgage, it's going to hurt your credit score. So for me personally, I noticed that it hits me about 2 points. So -2 points in my credit score every time I apply for a mortgage. Now don't freak out. Whenever you go to apply for a mortgage, and let's say you get declined from this bank, you have 45 days to apply for as many mortgages as you can without it affecting your credit score again. So you can apply to many different banks to find out what the interest rate is going to be, what's their minimum down payment, etc. You have 45 days from the time you first apply for a mortgage to the 45-day mark. If you apply in between that time period, it's not going to hurt your credit. Now that's just with mortgages. Don't go out and do that with credit cards, because every single time you apply for a credit card, it will hurt your credit score. So this only applies to mortgages. The second thing on how to get approved for a mortgage is your job history. Now what does that mean exactly? That means basically your income. The bank wants to see that you have enough income coming in to cover that mortgage. And most banks will not lend to you if you haven't had a job for over 2 years. When it comes to your income, we're going to be talking about that a little bit later in the third step, the debt to income ratio. And let's say you've had a job for 2 years and it's a W-2 type job. When you file your taxes, it's a W-2. What the bank wants to see is 60 days worth of pay stubs. So if you're paid bi-weekly, that's going to be 4 pay stubs that you got to show the bank. But whenever it comes to 1099 jobs, when it comes to commission-based jobs, you're going to have to show 2 full years of income. The third thing is your debt to income ratio, or your DTI. What does that mean? So let's take this example. Say you make $4,000 a month, and with all your debt combined, your car payment, your minimum your minimum payments for your credit cards, and any other expense that you might have that comes out monthly. Maybe you even have a personal loan. When it comes to your debt to income ratio, you want to leave out utilities, grocery bills, anything like that. They're just specifically looking at your debt. And let's say you make $4,000 every single month, and with everything combined, your car loan, your personal loan, everything combined, all of the minimum payments you have to make, and let's say that's $2,000. So what you're going to do is $2,000 divided by $4,000, and what do you come up with? You come up with 50%. So your DTI, your debt to income ratio, is now 50%. Typically, banks do not want to lend to people that are 50% or over. So the fourth and final thing a bank is going to look for when you're going to get approved for a mortgage, that's how much cash do you have. So what does that mean? How much cash do you have in the bank for the down payment? So how are banks going to know that information? Like I said in the job history, I kind of teased it a little bit. You're going to provide 60 days worth of pay. And that's if you're a W-2 job. Whenever you're commission based and you're a 1099 job, you're going to provide 2 years. So the statements that your bank sends to you, either your email or paper, you're going to give those statements to the bank. And that's how they're going to see every transaction that has been made in the past 60 days or 2 years. And they're going to see the income that is coming in and how much cash you actually have in your account. So if you have all 4 of those things, you're going to get approved for a mortgage. So those are the 4 things on how to get approved for a mortgage. And if you're wanting to start investing in real estate, there's going to be a video popping up over here or over here about how to invest $5,000 in real estate. That's all you need, $5,000. Sometimes you don't even need that. You need $0. But again, that video is going to pop up over here, and until next time, guys, I'm out. See ya.